London, September 1931. The vaults beneath the Bank of England stood nearly empty. For over 2 centuries, these stone chambers had held the wealth of an empire. Gold bars stacked floor to ceiling, the metal that backed the pound sterling, the foundation of British power. But now, on this gray autumn morning, clerks walked through corridors that echoed with absence. The gold was gone, not stolen, not lost to war, simply demanded. Foreign creditors had come calling, banks in Paris, investors in New York. They no longer trusted paper promises. They wanted metal, real value. And Britain, exhausted from the Great War, hollowed out by debt, couldn't say no. Each week, ships left London carrying gold bars eastward and westward. Each week, the empire's foundation crumbled a little more. The unthinkable was about to happen. Britain would abandon the gold standard. The pound, once as solid as the crown itself, would float freely, devalue, collapse. But here's what the history books often skip. Britain didn't just survive this crisis. Within 5 years, the empire stabilized, the currency recovered, trade continued. How? The answer lies not in gold, but in a metal most people never think about. A metal that would save Britain in 1931, reshape global economics for decades, and teach us exactly why similar tricks won't work for America in 2026. Before we go further, let me ask you something. Have you ever wondered why economic crises seem to hit the same way, but the solutions never work twice? Why does history repeat, but never quite rhyme? Drop a comment below with your thoughts and make sure you're subscribed, because by the end of this video, you'll understand a pattern that explains everything from Britain's survival to America's current dilemma. The story begins not in 1931, but in 1914. When World War I erupted, Britain was the world's banker. The pound sterling wasn't just British currency, it was the global currency. From Buenos Aires to Bombay, merchants settled debts in pounds. Why? Because Britain promised something simple. Bring us paper, we'll give you gold. Always, without question. This promise, this gold standard, made the pound trustworthy. It made Britain powerful. But war is expensive. Unimaginably expensive. Britain borrowed. From America, from its own citizens. The government issued bonds, printed money, made promises. By 1918, victory came with a price tag Britain couldn't read. The numbers were too large, the debt too deep. And here's the crucial detail most people miss. Britain won the war, but lost the peace. Why? Because America had flipped the script. Before 1914, Britain loaned money to the world. After 1918, Britain owed money to the world, specifically to America. The United States had financed the Allied victory, and now American bankers held British debt. New York had gold, London had promises. The power dynamic had reversed silently, completely. But Britain tried to pretend nothing had changed. In 1925, the Chancellor of the Exchequer, Winston Churchill, made a fateful decision. He returned Britain to the gold standard at the pre-war exchange rate. Why? Pride, prestige, the illusion of strength. To admit the pound was worth less would be to admit the empire was weakening. This decision was a disaster. Think of it like this. Imagine you lose your job, but you keep spending like you're still employed. You maintain appearances. You tell everyone you're fine, but behind closed doors, your savings drain away. Every month, the gap between income and expenses grows. And that was Britain in the 1920s. British exports became too expensive. Factory owners couldn't compete. Workers lost jobs. The economy stagnated while the rest of Europe, with cheaper currencies, thrived. And all the while, foreign investors watched. They saw the truth. They knew Britain couldn't maintain this fiction forever. Then 1929 arrived. The Wall Street crash, global depression. And suddenly, everyone wanted their money back. Here's where the pressure became unbearable. Britain had borrowed short and lent long. The empire had invested in railroads in Argentina, mines in South Africa, plantations in India. These investments would pay off eventually, but not today, not this month. Meanwhile, French banks and American investors wanted their gold now. The Bank of England faced an impossible choice. Keep paying out gold, drain the vaults completely, and collapse. Or break the promise. Abandon gold, admit weakness. In September 1931, they broke the promise. The pound fell. In forex markets, traders watched the value drop 25% overnight. The unthinkable had happened. The British pound, backbone of global trade for a century, was just another piece of paper now. Newspapers called it catastrophe. Economists predicted disaster. But something strange happened. Something that reveals a truth about power and economics that most people never grasp. Britain didn't collapse. In fact, within months, the economy began recovering. How? Because devaluation is a kind of liquidation sale. When your currency loses value, your exports become cheap. Suddenly, British textiles, steel, and machinery were affordable again. Factories reopened. Workers returned. International buyers who had avoided British goods now rushed back. The economy, freed from the gold standard straitjacket, could breathe. But that's only half the story. The other half involves India and silver. Most documentary scripts would skip this part. It's complex, it's technical, but it's essential. India, the jewel of the British Empire, used silver, not gold, as its monetary base. For centuries, Indian currency ran on silver rupees. When Britain abandoned gold in 1931, this created an opportunity. Britain could manipulate the silver market to maintain control over Indian trade and finance. Here's how it worked. Britain began buying massive quantities of silver. Why? To support the silver-based Indian rupee. If the rupee collapsed, India's economy would implode, and Britain would lose its most valuable colony. So London propped up silver prices, stabilized the rupee, and kept India economically tethered to the empire. But there's a deeper layer. By controlling silver markets, Britain also controlled China's economy. China, like India, used silver currency. When Britain bought silver, it influenced Chinese trade. When it sold, Chinese prices fluctuated. This wasn't accidental, it was strategy. The United States noticed. In 1934, America passed the Silver Purchase Act. Washington began buying silver too, but for different reasons. The American government wanted to support Western mining interests and inflate currency, but the effect was global. Silver prices soared. India's currency appreciated. China's economy destabilized. Now, here's the question nobody asks. Did silver actually save the British Empire, or did it just buy time? The answer is both. In the short term, silver stabilized India and helped Britain navigate the 1930s. The empire avoided complete collapse. Trade routes remained open. The pound recovered some stability. By 1936, the worst was over. But the long-term cost was invisible in 1931. By abandoning gold, Britain admitted it could no longer uphold the global monetary system. By manipulating silver, Britain revealed its power came from financial engineering, not real strength. Other nations watched. They learned. When World War II arrived in 1939, Britain again needed American loans, again borrowed, again promised repayment. But this time, America demanded collateral, real assets, military bases, control. By 1945, Britain was victorious but bankrupt. The empire began dissolving. India gained independence in 1947. The pound never regained its global dominance. The dollar replaced it. America inherited the role Britain once held. Silver had bought Britain 15 years. 15 years to manage a decline rather than experience collapse. That's not nothing. But it wasn't salvation. Now, let's talk about 2026. America today faces pressures remarkably similar to Britain in 1931. Massive debt, trade deficits, foreign creditors losing confidence. The dollar, like the pound before it, serves as the global reserve currency, but also like the pound, the dollar's dominance rests on trust, and trust is eroding. Some analysts argue America could use similar tactics, devalue the dollar, stimulate exports, manage decline gracefully. They point to Britain's survival as evidence this works. But here's the critical difference. Britain was already declining. The empire was living on borrowed time. Devaluation simply managed the descent. America, by contrast, is still the world's largest economy. The dollar backs not just trade, but oil, debt, and international reserves. If the dollar fails, the global system has no backup. Britain could abandon gold because France and America had gold reserves to stabilize their own currencies. Who backs up America? China's currency isn't freely convertible. Europe's economy is fragmented. No alternative exists. Furthermore, Britain in 1931 controlled India and influenced China through silver. This gave London leverage. What leverage does America possess? Military power, yes. Cultural influence, certainly. But economic control, that's shared now, distributed, decentralized. The tactics that saved Britain won't save America because Britain was managing imperial decline. America would be triggering global systemic failure. There's another factor, technology. In 1931, financial transactions moved slowly. Ships carried gold. Letters conveyed orders. Modern markets move at light speed. Algorithms trade billions in microseconds. If confidence in the dollar cracks, capital flight would be instantaneous. Not gradual, not manageable. Britain had time to adjust. America won't. Does this mean collapse is inevitable? No. It means the playbook from 1931 doesn't apply. Solutions must be structural, not tactical. Debt must be addressed, not managed. Production must increase, not just be made cheaper through devaluation. The lesson from British history isn't that clever financial engineering saves empires. The lesson is that empires always believe their situation is unique, their power permanent, their crises manageable. Britain thought so in 1925 when Churchill restored the gold standard. Britain still thought so in 1931 when it abandoned that standard. Britain even thought so in 1945 when victory masked insolvency. But power doesn't disappear suddenly, it erodes. Each short-term fix, each financial trick, Each manipulation of currency or commodity buys time but sells the future. Silver rescued Britain from immediate disaster in the 1930s, but by 1947, the empire was finished. The rescue was temporary. The decline was structural. Here's the uncomfortable truth. Systems built on debt always face a reckoning. Whether it's Britain borrowing to fight Germany, or America borrowing to maintain global dominance, the mathematics eventually assert themselves. You can delay, you can restructure, you can inflate or devalue or manipulate, but you can't escape the fundamental equation. You cannot borrow forever. Britain learned this. The empire survived by managing expectations downward, by accepting a smaller role, by surrendering global leadership. That transition took 50 years and cost everything that made Britain powerful. Will America make the same choice? Will it manage decline, accept reduced influence, become simply one power among many? Or will it attempt to maintain dominance through methods that no longer work in a world that no longer permits them? History suggests the latter. Powers rarely surrender gracefully. They usually fight to maintain position, even when fighting guarantees eventual collapse. Britain is the exception, not the rule, and even Britain's managed decline came at tremendous cost. So when you hear arguments that financial engineering can save America, remember London in September 1931. Remember clerks walking through empty vaults. Remember the empire that bought 15 more years by abandoning its promise of gold and manipulating silver markets. Remember that those 15 years were merely the interval between dominance and irrelevance. Silver rescued the British Empire, but rescue isn't the same as survival. And what worked in 1931 in a world of slow ships and colonial control won't work in 2026 in a world of instant capital flows and distributed power. The question isn't whether America can copy Britain's tactics. The question is whether America can learn Britain's real lesson, that postponing the reckoning is not the same as avoiding it, and that empires always pay their debts eventually, one way or another. If this perspective changed how you see current events, hit that like button and share this video with someone who needs to understand where we're really headed. And drop a comment. Do you think managed decline is possible for America, or is this time different? I'll be reading every response. The vaults beneath the Bank of England are full again now. Gold returned decades later when it no longer mattered. But walk through those corridors today and you can still sense the absence. The gap between 1931 and 1947. The years when silver bought time but couldn't buy tomorrow. History doesn't repeat, but it echoes. And right now, if you listen carefully, you can hear the echo of empty vaults growing louder.